everyone, and welcome back to our Pension Committee Board here at Grangemouth Community Education Unit, and also welcome to our members online this morning, today Tuesday 26th of November. In accordance with Section 43 of the Local Government in Scotland Act 2003, I, as convener, has directed this meeting to allow remote attendance. This meeting will be live streamed to allow the public to hear today's pension business, and thereafter the meeting will be available to view on the Falkirk Council YouTube channel. All questions are welcome, as the responsibility for the governance of the pension fund sits with the Pension Committee as delegated by Falkirk Council, the administrating authority. The Pensions Committee is supported by our Pensions Board to ensure that decisions are made with the terms of the fund rules and with good practice. Please note from agenda item 10, exclusion of the public, and at that point we'll have a 10-minute comfort break. I will now commence formal business. One, apologies. Do you have any apologise, Mr. Peary?
We don't have any apologies, convener, but sometimes emails come in, so we'll double check emails, and if I've missed any, they'll be in the minute. But as of now, no.
Right, thank you. Agenda item 2, declarations of interest. Members should declare any financial and non-financial interest they have in any item of the business at the meeting, identifying the relevant agenda item and the nature of the interest. I see none in the room and I see none online. Thank you. Agenda item 3 is the minute of the joint meeting of the Pension Committee and Board on the 24th of September 2024. I'll give you a minute or two to have a read.
Chair, can I just make a correction to item PE 18 and the transparency statement? I want to correct the name of the company I'm involved with from Smart Regional. That should read Smart Beta, BETA.
Thank you. We'll take a note of that. So do we all agree the minute apart from that note?
Agree.
Yes. Moving on to agenda item 4, which is compliance with the Pensions Regulators Code of Practice, and our Catherine Carruthers will take this report. Thank you.
At the beginning of this year, the Pensions Regulator condensed 10 of its existing codes of practice into a single general code. The new code covers 15 central themes, of which 14 apply to the local government pension scheme. Though the exercise was in the main a consolidation exercise with little or no change to existing duties and obligations, it does come with the expectation that the fund will measure its compliance against the code and put a plan in place to address any identified shortcomings. The fund's assessment against the code is ongoing. However, the fund is largely compliant with the majority of the regulatory requirements, and there are no areas where the fund is not at least in part compliant with the code. The assessment against the regulator's expectations and best practice is also ongoing, and again, the fund is largely compliant. And what I'm finding is that where the fund is either not fully compliant or partially compliant, it's generally in an area where the fund would not expect to take action. For example, one of the expectations is that we would formally assess the performance of the chair of the board. not something we might take forward. Going forward, it is intended that a full report detailing the fund's compliance against the entire code and a plan for bridging any gaps found will be brought to the March meeting of the Pensions Committee and Board. This plan will also set out the expectations for ongoing monitoring and reporting of compliance with the code.
Thank you, Catherine. I'm now going to open it up for questions. Does anybody have any questions for Catherine on this agenda item? Councillor Hannah, thank you.
Thank you, Convener. Just a little more clarity. At 4.5 in the report, you've said that the fund is largely fully compliant, and where the fund is not compliant with the code, it is partially compliant. I wonder if you could say a little more about that, and do we expect to be fully compliant by March, by the time you're reporting?
We might not be fully compliant by March, but we will have a plan to reach full compliance. Where we are partially compliant, it's more in the evidencing and the reporting backup of how we are compliant. So we are complying with the requirements, but not the reporting, you know, the evidential side of it. That's the bit that needs to be brought into play, which will probably take more time to actually program into the system.
Okay, thank you.
Thank you, Councillor Hannah. Anybody else have any questions? No? Mr. Whitty.
Oh, thank you. No, helpful report out. One of the risk areas is cyber security. I wonder if you could maybe just say something specifically on that, given the huge risks that can carry and potentially increased activity against UK institutions that's possibly been reported in the media. So I just wondered where we were in compliance on the cyber security side. Thank you.
Cybersecurity assessment is complete, and we are 100% fully compliant in that area. We have our cybersecurity is addressed in our risk register and in our risk assurance map, and we also have that forming in part of our business continuity plan.
Thank you.
Thank you, Mr. Whitty. I'll now go on to the recommendation. The Pensions Committee and Board are invited to note the contents of this report. Thank you. I'll now move on to agenda item 5, and Catherine again will take general governance matters.
The first item is very timely, and it is to welcome Andy Whitty to our pension board as our representative for the admitted body employer representative. The next is an update on the McLeod remedy. The retrospective amendment to the Local Government Pension Scheme Scotland regulations to remove the requirement for funds to include McLeod remedy data in a 2024 annual benefit statements remains outstanding, but is expected to be laid by the end of this year. So we have reported the non-inclusion of the McLeod remedy data in the 2024 annual benefit statements to the regulator, who as yet has not taken any enforcement action, but as reported and as advised, we are expecting the regulations to be laid before the end of the year and to have retrospective effect to remove the requirement for that data to have been included in the annual benefit statements. Whilst we're waiting that amendment coming into force, the pension team continues to complete the updating of the McLeod rectification data view and the pension administration software, which will drive the data that needs to be output to annual benefit statements. The bulk process updated the majority of the data views, but there's still over 1,000 cases to manually review and update. Completing this process is expected to take several months, as the work will be conducted in tandem with business as usual. Additionally, full automation of the MacLeod Remedy calculation routines is not expected to be completed until the end of 2027. That affects all UK local government pension schemes. And the solution for affected councillor members will remain manual. It only affects Scotland and it is down to the cost of development. However, since writing this report and an update to what I've written, we have actually taken delivery of the MacLeod rectification data view for councillors, so we will be able to populate that and use that going forward. Once we've updated all the MacLeod rectification data views, we will start work on identifying and making any redress payments, and we will do that in line with the guidance that's been issued by Scottish ministers. The next one is the Scottish Fire and Rescue Service, and the consolidation of the Scottish Fire and Rescue Service membership into the Strathclyde Pension Fund is nearing completion. The administration transferred on the 31st of October, and the asset share will transfer next week on the 6th of December. Unfortunately, I don't have an accurate figure for the assets that will transfer because that will be determined 2 days before the transfer takes place. So the actual amount that we pay will be reported at the next joint meeting of the committee and board in March. Moving on to the next item, the pensions regulator reporting. I have submitted the scheme return, and the key information on the scheme return is our data scores, and our common data score was 98.6% accurate, and for scheme specific data it was 92.32%. To explain, name, date of birth, national insurance number and address, to name a few of them, are all common data items. Scheme specific data is the data we use to calculate benefits such as scheme structure and design. Most of the holes are generated by historic data gaps which don't actually affect the benefit calculations, or are addresses where members have moved but not given us their new address. The next item relates to the guidance in England and Wales for their funding strategy statement. This was reviewed and updated as part of their valuation year. They run a year later than us. The group conducting the review included Scottish representatives, and the guidance is expected to be adopted for use in Scotland once it has been approved for use in England and Wales. With regard to the fiduciary duty owed by Pensions Committee and Board, the Scheme Advisory Board in England and Wales investigated claims from lobbyists of wrongdoing by local government pension scheme funds in not divesting from certain companies. And as a result, they have issued a statement on fiduciary duty and dealing with lobbying activity, with the intention that administering authorities will find the information of assistance when engaging with stakeholders, committee and board. We are now in an environment and a climate where there is an increased interest in how local government pension funds are investing. And while this guidance is predicated on English law, there is read across to the local government pension scheme in Scotland. And I would strongly recommend that all members of the committee and board make time to read this guidance. The next item relates to the change in the rate of a CPI for September. This is generally used to revalue local government pension schemes benefits, and it was announced at 1.7%. We expect UK government to confirm that this rate will apply in February next year, and the rate will revalue in April. The state pension is subject to a triple lock, so any increase used for that could be different from what we use for local government pension scheme, but only if the other two measures that are used in the triple lock are higher than the 1.7%. The fund, with regard to the pensions dashboard, the fund continues to make progress towards its goal of onboarding to the pensions dashboard ahead of its connection date, which is the 31st of October 2025. The ISP, that's the service that we will use to talk to the dashboard, is going to be supplied by Haywood, which is the fund's pension administration software provider, and a connection window for the activity to connect to the dashboard has been booked to start in February and is expected to take up to 10 weeks. An update on the progress we are making will be given in the March meeting, but it may only be a setting out the actual planned activity, because we have to release the papers about approximately not quite a month before the meeting, so there will be an elapse of time. And as I said, the key message is we do expect to be in a position to connect to the dashboard on our staging date, which is the 31st of October next year. So that's in hand. The next item I know will be of interest to committee and board, and it is to advise that the report covering the environmental, social and governance matters affecting the pension fund's investments will be brought to the March meeting of the committee and board. And to ensure members are well prepared and equipped for the ensuing discussion that we will expect from this, training is planned for January 2025, which will be led by LPFI. Invites to the training will be sent to members of the committee and board during December. Sorry, September's backwards in time. And finally, to wrap up, the Knowledge and Skills Questionnaire, which was discussed and agreed to in our March of this year meeting, is ready for distribution and will be issued to all members of the committee and board this week. I'm getting a look from my Chief Finance Officer because it's also going out to officers in the fund as well. Nobody is getting out of completing the questionnaire. The questionnaire is set up in two parts but should be returned as one document. The first page will contain your name and any feedback you have for me about the training you want or that you feel would be beneficial, and that when I get it back I will record and remove and put to one side. The questionnaire is the remainder, and there is no names on that, and it will be recorded with no names for anonymity, and I will score it and I will make note of any areas of training that may be required, and then I will report back as a group result to the committee and board how we all did. If you want your score or you want to know what your feedback is, let me know, because I won't do it otherwise. I will report back as a group, but if you do want to know, just let me know. I'll make sure I cover that off in the email that goes with the questionnaire. And that is it. Thank you.
Thank you. Thank you, Catherine. Just on that point, was there a pass mark? Giving feedback, because I think everybody, when they're doing these things, short knowledge and skills questionnaire, you wonder if there's a pass mark.
You'll be glad to know there is no pass mark. This is about actually benchmarking where the knowledge is, where the gaps are, and where we need to focus training activity.
Thanks for that, Catherine. I'm now going to open it up for questions now. I have Councillor Hannah, thank you.
Thank you, Convener. I have a couple of issues. First of all, on the MacLeod issue, you make reference in 4.4 to a small cohort of the scheme's membership. I mean, clearly for pensioners, it's important that we get redress out to them as quickly as possible on this one. Do we know what the numbers are, or proportions, or?
Did you, sorry, Councillor Hannah, did you say 4.4?
In 4.4, yes. It's just referring to the MacLeod pensioners, sorry, the pensioners affected by the MacLeod issue, and says that there's a small cohort.
But that small cohort is the councillor, sorry, that is with regard to the fact that we didn't at the time of writing have a data view for the MacLeod remedy data for councillors, and that we would be, it will be a manual intervention going forward, and it is because it is a small cohort. We have approximately just over 100 councillor members in our fund of nearly 39,000 members, and there's probably round about 40 where they might be impacted by MacLeod. And it is down to costs. The costs for MacLeod to have the system developed is in excess of £1 million across the UK, and that is just for main scheme members. Because the structure for councillors is different, you'd be looking at roughly the same costs, but instead of being spread across approximately 60 funds, it would be across the 11 funds in Scotland, which makes manual the cost-effective option.
Okay, thank you. And the other issue I wanted to raise was on section 11. Amanda will be aware, and I know Catherine is now becoming aware of how excited I get whenever we're talking about training and briefings. But in relation to this item, I have certainly had a number of emails about this issue, and I'm sure others have as well. There is concern out there about the nature of the investments that the pension fund makes, and I wonder if you could say a little more about what's going to be brought to us at the next meeting, and a little more about the training that's going to be arranged in January, because I think it's important that the public are aware that we are concerned about the issue, about where our investments are going, and looking into it.
Councillor Hannah, I think just to let members online know and people here, I believe we've got protesters outside. It's quite loud actually, and it's quite hard to hear the conversations. I mean, one part of your question was, I think we all got a lot of emails quite recently from the public, and the Falkirk Pension Fund strives to be transparent, because this was discussed last year, but due to resource, it's not on the agenda today. But it doesn't mean to say that it's not going to be on the agenda. Excuse me. It will be on the agenda. But the thing is about this, there's a lot of work involved with that. There's a lot of work involved with getting reports together. And as you say, Councillor Hannah, and Catherine says, we have to get training, because we want to take due diligence, that we want to read the reports carefully that come to us, have the discussion, have the questions, have the debate, and then come to a conclusion at that point. But we haven't ignored all the emails that the public has sent into us about our investments. I don't know, sorry Catherine, Amanda wants to say.
Thank you. Thank you, convener. So at the moment, what we've committed to do is to have, we're working with Lothian Pension Fund to look at training in January that will cover all our sort of ESG issues. So this is in a response not just to the emails around the conflict in Gaza, but also in respect of the deputation from Clackmannanshire about fossil fuels. So sort of encompassing all of those issues. Now, what we need to do is bring a paper back to committee. We're aiming to do that in March. And that sets out our approach to all of that. But we thought it would be helpful for the committee and the board to have training in January in advance of that paper coming. We also have the Joint Investment Forum, which we'll come on to later on in the agenda, where we meet quarterly with Lothian and Fife, and we discuss these kind of issues at that forum, because the three funds are invested in very similar activities right across the piece. So we are going to take the work forward. We are going to come back to committee. We're just sort of trying to do it. We've got a lot of change in terms of committee members and board members, so we thought the training would be helpful before the report comes back. Thank you.
Does that answer your question, Hannah?
Thank you for that. As you know, I've already actually been benefited from, because I'd asked questions about it, I already benefited from both Catherine and Amanda's assistance on this. I think it is important that we're very clear about how we balance our fiduciary duties versus our environmental and social duties. And it's not a simple, straightforward issue.
Thank you, Councillor Hannah. Do we have any other questions at all? Councillor Sinclair, did you have your hand up?
Thanks, Convener. Yes, I did, but I'm having some pretty awful technical issues here at the moment. I think Councillor Hannah covered some of what I was going to ask. I just wondered if it would be possible for an interim update to be provided to the committee or the board in some way to kind of give us an insight into this, not just on training, because I think, I'm happy to be corrected here, but there's not, obviously, there's a lot of correspondence come through on this, and this is a very concerning topic, given the situation that there is out there. Would part of this not also fall into investment activity as well as ESG? So obviously, if it's perhaps a question that we need to discuss, not just ESG, but the ethical nature of some of our investments too. And I wonder if that would be part of the report that's coming forward in March, or if that's something that we have the ability to discuss at another opportunity. Thanks.
Thank you, Convener. Councillor Sinclair. The ethical aspect of it would be covered by the social and governance aspects of the ESG. So the training and the report that we're looking at would cover all those aspects. I suppose I would caution that's difficult to define. And so we'll kind of discuss some of that at the training, and also consider how we present that in the report. But it is, as Councillor Hannah said, it is a difficult area to work through. But yes, the ethical aspect of it would be covered by what we're planning to do.
Thank you, Councillor Sinclair. I now have another question from Mr. Cleary.
Yeah, it's more of an observation, I think, rather than a question. As we're now going to be waiting another 4 months or thereabouts before we actually get the details of the report and actually start working out the rights and the wrongs of things, I think it would be helpful if everybody involved and sitting around this table right now could at least issue a holding statement of some kind to let people know it's coming. And I think we all need to do the same thing and send the same message. So is that something we could look at, perhaps getting to pull together a holding response that we can all use until we actually get into the nitty-gritty detail?
Hello, Mr. Cleary. Yes, I think we could do that. I appreciate that it's coming back March, and we need a full report. A lot of the information we don't know what's in that report. For us, to make decisions or to even discuss it without the full knowledge of what's in that report. As you know, we can't do that. That's no compliance, but certainly we can do that, and I'll definitely make sure that the report will definitely be on the agenda the 11th of March. And I do understand members of the public will feel disappointed that it's not getting discussed today, but it will get discussed on the 11th of March with the full information to allow it to be fair to the public and obviously us on the Pension Committee and Board. So you're quite satisfied with that, Mr. Cleary?
Yeah, I just think everybody should be singing from the same hymn sheet, and I think it's important we all put out the same message. So a standard kind of holding response, I think, would be good. Thank you.
Thank you.
Just on that, I mean, I will be responding to all the people who have emailed me, and I'm sure others will too. We perhaps should coordinate our responses and ensure that we're and discuss them with officers to ensure that we are giving a consistent message and we are making clear that we are concerned about it and have every intention of doing something.
Absolutely, Councillor Hannon, because I think a lot of us did get quite a lot of emails and that. So if the response is consistent and it's the same message and it informs the people that wrote to us that it will get discussed on the 11th of March, I think that would be good.
Chair. Sorry, can I ask who's going to prepare this report?
The report is the report will be getting done. I don't know if it's been done or partially done.
No.
I'm just wondering who is going to be writing it.
Thank you, Convener. Thank you, Mr. Davies. So the report will come from myself. We'll be drafting it with myself and Catherine, but also we'll be working with our colleagues in Lothian because obviously they are helping us manage our investments. I think there's so many different aspects to this that what may happen is that we bring a report where members may want us to go back and look further into a certain area, but we'll bring the report with the best information that we can, and then it'll be for members to decide what the next steps are. Thanks.
Yeah, I just wonder whether you'll be using external consultants.
Well, within Lothian, they have a head of responsible investment, so we get a lot of advice and support from them. We also have some sort of support that we get from our engagement specialists that we use. So we have, at this point, I think we feel we have enough, but we'll discuss it further at the Joint Investment Forum, which is next week. And if we felt that we needed some external support, we can arrange that following that meeting.
Thank you, Amanda. Do we have any further questions? No, I don't see any hands up. So the recommendation is the Pensions Committee and Board invited to note the contents of this report and what was discussed there about the report coming back in March, and also the Pensions Committee and Pension Board membership. And I just want to say welcome, Mr. Whitty. Thank you for being with us. Now going to move on to the Pension Fund Delegation, Agenda Item 6, and I believe that's Amanda takes us.
Yeah, thank you, Convener. So the short report in front of you sets out pension fund delegations which are in place, and these are noted at paragraph 3.4. And the delegations reflect that that paragraph reflects that there's delegations from the Council to the Pensions Committee, and then to the Director of TCCS, and then on to myself. The Pensions Regulator recommends that the Committee and Board receive an annual report to confirm the arrangements that are in place. And so from here on in, you'll receive this kind of paper on an annual basis. The report will also be helpful in advance of the training provided for January, where we will consider the delegations in place in respect of investments and how those investments work. So the delegations that are currently in place for myself as Chief Finance Officer are listed at paragraph 5.4, and then there's 2 further specific discretions outlined in section 6 of the paper, and that relates to the payment of lump sum death grants and also implementation of the investment strategy, and it will be that aspect that I think we'll come back to in January as part of the training. So it's quite a brief report. I don't intend to say any more on it, but I'm happy to take any questions. Thank you.
I'll open it up for questions. Does anyone have any questions? No, I don't see any hands up. I was going to ask a question myself, actually, Amanda. It's about the payment of the lump sum death grants. Like, you know, when it comes to that, what is the percentage that they're all up to date? Because I'd imagine in people's lifetime, sometimes they don't report the nomination has changed through death, separation, divorce, that sort of thing. And how is that, you know, how is that made correct for the people to receive the lump sum death grants?
So when someone dies, we will do a fact find and we will send a document out to the relatives or the person who has notified the death, and we will ask some basic questions about the person's family circumstances and situation at time of death to understand if there is a nomination form, which is rare, that remains current, because as you said, people do get married, they do get divorced, and they do forget they've made a nomination form, and then they remarry and they may have a new family. So we will check that out, and we will then, the fund is there to, you know, look after the dependents. We will make a decision that will be to the benefit of the dependents of the person who has died.
Thanks very much for that, Catherine. That was good to know that. So we'll now move on to the recommendation. The recommendation is the Pensions Committee and Board are asked to note the contents of this report and invited to comment as appropriate. Agreed. Moving on again. We're moving on to agenda item 7, and it's Amanda again who's going to take this report, cash management policy.
Thank you, Convener. So the cash management policy is presented for approval today. The aims of the cash management policy are to ensure that the fund retains sufficient cash to pay pensions and other transactions, and to ensure that operational cash balances are minimised where appropriate. When members set the investment strategy in March, the strategy included a target of 2% of the fund allocated to the cash policy group, and that was set up to recognise the operational cash requirements of the fund. So that policy group is regularly monitored by the Joint Investment Forum alongside the other asset policy groups that we have. The contents of the cash management policy are shown in paragraph 3.4, and the policy itself is at Appendix 1, which is on page 31 of today's agenda. As noted at paragraph 3.6, the cash management policy is aligned to the Council's treasury management arrangements, particularly in relation to counterparties and credit ratings. And as with the Council's treasury management policies, security of the cash is the main consideration for any transactions that we undertake. Paragraph 4.4 notes the cash that was held at the 28th of October of this year, and that relatively high level of cash was due to a transition of assets between policy groups. Over the last sort of 4 weeks or so, that cash balance has been reducing, and as we heard earlier, we'll be making a payment for Scottish Fire and Rescue as well. So we know that there's a few calls on that cash that will reduce the balance further. I'm happy to take any questions. Thanks.
Thanks, Amanda. I'm going to open it up for questions. Does any members online or in the room here? I don't see any hands up.
Chair.
Oh, sorry, Mr. Davis.
Just out of interest, I'm just curious as to know roughly what monthly inflows you get from contributions and how much the monthly outflows are in terms of payments, just an order of magnitude.
So at the moment, the way when we receive the contributions, we actually pay majority of that in the benefits. So it's there for a very, very short period. The fund is entering cash negative position. Therefore, we will have to think about from April, it's unlikely that our contributions will cover our expenditure that we pay in pensions.
Okay, no further hands up. Okay, I'm going to move to the recommendations. The Pensions Committee and Board invited to note the contents of the report, and the Pensions Committee, and this is where it's a little bit different, are asked to approve the updated cash management policy. So do we all agree?
Agreed.
Thank you. Thank you. We're now going to move on to something a bit different. We're going to move on to agenda item 8, investment review, and that's Mr. Chen Albert.
Oh, thanks very much, convener. Good morning, everyone. Hope you can all hear me. Yep. Okay, yes. Great. So just going over the investment update for Q3 to end September 2024. I'll be talking about the market developments, the strategic allocation, and then an overview of investment performance for the quarter. So in terms of the market over Q3, this was notable for sustained strength pretty much across all asset classes. Global equities rallied to all-time highs, with the global equity market up almost 7% in US dollar terms. And this was largely spurred by a slightly greater rate cut from the US Federal Reserve, cutting interest rates by 50 basis points in September as inflation started to retreat from previously high levels. The European Central Bank and the Bank of England also cut rates, both in August, again, as inflation came down in both the Eurozone and in the UK. Rate cuts for most central banks appear to be set to continue, although with the US election result coming through and potential policy changes from the Trump administration, there are thoughts that potentially inflation may start to rear its head again, particularly in the US, if restrictive tariffs do start to come in. In terms of the strategic allocation for the fund, paragraph 4.2 sets out the target allocations. These were agreed following the investment strategy review in March 2024. So you can see that at table 1. And then moving on to paragraph 4.3, table 2, we show the policy group allocations on a quarterly basis over the past 12 months. So just looking at the table there and the position as at the 30th of September 2024, we can see the main changes over the quarter have been a reduction in the equity policy group weight. So this has gone from around 56% to just under 54%, and a modest increase in the allocation to sovereign bonds from 12.6% to 14.6%, and an increase in the cash allocation. If we then go down to table 3 at paragraph 4.4, this shows a more up-to-date position of the policy group allocations and individual mandate weights as at the end of October, showing the positions there. In terms of the changes from end September to end of October, these are mostly unchanged, with an underweight to equities, broadly in line with the target allocation for real assets, underweight to credit, and broadly in line with sovereigns and an overweight to cash. These policy group positions, in terms of their relative positions to target, are in line with the recommendations of the Joint Investment Forum, and these positions will be reviewed again at the next meeting at the beginning of December. In terms of fund returns for the quarter, we note these at paragraph 5.3. The total fund returned 1.8% against a benchmark return of 0.8%. Just to note again that the fund's private market assets, primarily in real assets, are not valued as frequently as listed assets and benchmarks. The long-term returns are noted in paragraph 5.4, appreciation of 7.6 per annum over the very long term since September 2001. Looking at more recent figures, over 5 years, the fund has returned 6.5% per annum against the benchmark of 3.2%. Over this 5-year period, the fund has benefited from its exposure to equities and infrastructure, while UK government bonds have generated negative returns. There's more detail on investment management monitoring that will be discussed later in the paper relating to the Joint Investment Forum, but I'm happy to leave it there, convener, and happy to open up to any questions or comments that the members may have. Thank you.
Thank you, Mr. Chen. I'll just quickly come in actually first, then I'll open it up to the members. Obviously, there's been a lot happening in geopolitics this year, and you did mention the Trump election in America. So, I mean, obviously you are the professionals in the game. So, is it possible that can you identify any funds that are at risk not performing with the change of tariffs? America's came out already and saying it's changing some tariffs, I think, to Canada. Canada was one, Mexico I think was another one, and obviously China. So, I mean, a lot of these companies obviously have stocks, and, you know, a lot of these companies as well. So there's going to be a movement there. So is that something you can identify, or is it too soon?
It's a very good question. So I think you're asking whether are there individual stocks or are there individual funds that are at risk from the evolving geopolitical situation? And I think the answer is yes, but I would say that Falkirk probably isn't exposed to them. So the funds that would be specifically impacted by these changes would be funds that had a specific geographic focus. So if you had funds that were, say, heavily concentrated with Chinese exposure, those might be impacted. Or if you had funds that had heavy Latin American geographic exposure, again, it's particular geographies and businesses in certain geographies that we might expect to be impacted. Now, the way that we think about, I think more generally in terms of fund allocations, is that broadly speaking, Falkirk has allocations to a mix. So you have diversified equity exposure and diversification across your different policy groups. So from Falkirk's perspective, we wouldn't expect the fund as a whole to be particularly impacted. Within individual investments within those allocations, there may be some impacts, but some might be positive and some might be negative. But I would say from an overall perspective, we would say that the pension fund, you know, is not overly exposed to any geopolitical risk. It will have all pension funds will have some exposure just by virtue of the different investments that they hold, but I wouldn't say that there's a particularly material risk for Falkirk's allocation, nor would I say there would be any particular risks specific for any of the partner funds. I hope that helps.
Yeah, that does help, Mr. Chen. It's reassuring to know that. Thank you. So I'm going to open up Mr. Davis.
Hi, thanks for that. Given on a number of measures, the US market is historically highly valued. I mean, Warren Buffett has said it's on his measure, it's twice the size of the US economy. The Cape measure is at a very high level of 30 PE of 38. PE ratio for the US is at 2 standard deviations above its par. Can you tell us what the exposure is to US equities in the fund? And are you concerned about the weight to US?
Sure. That's a great question. It is something that we are aware of and something that we look at. In terms of Falkirk's allocation to US equities, that varies across the different equity mandates that you hold. But overall, in aggregate, Falkirk's equity exposure has about a 30% weight to US equities as at the end of September. And this compares to the broad market index, which has a weight in the order of 60% to US equities. So Falkirk is significantly underweight US equity exposure. Now, that isn't a function of specific decisions around geographic exposure. That is more a function of the particular types of mandates within which you invest. The results of those particular mandates mean that on a combined basis, that is what the exposure is. So in terms of the overall default positioning of Falkirk, so you have an allocation to the Schroders UK equity mandate, and so that has no US exposure, and you also have exposure to a number of mandates that have maybe more of a lower risk or a value style bias, and by virtue of those particular attributes of constructing those mandates, they then have a lower US equity weight. I hope that's helpful.
Thank you, Mr. Chen. We have another hand up. See, Councillor Brian Quinn, do you have a question? Thanks.
Yes, thank you. Everyone's asking about the US. I've got a question about the UK. What's the justification for our massive UK overweight, in our equity portion of our portfolio? Obviously, UK equities are kind of roughly about 4% of the global market. We're significantly, by some way, much higher than that. So, what's the logic behind that? Why are we in that position? Thank you.
Sure. So you have an allocation to Schroders UK equity, and Falkirk have had that mandate since 2006. So what does that make it? That makes it about 18 years. And over that period of time, the Schroders mandate has delivered very, very strong returns. And so in the context of an overall diversified portfolio, having an allocation to UK equities isn't necessarily a bad thing if you can identify a manager that can take advantage of the opportunities in that particular market. Now, you did raise the question that, the UK equities as a proportion of the overall mandate is, of overall global equities is only 4%. Does that mean that your allocation to UK equities should only be 4%? The UK government, judging by its recent pronouncements, might suggest that they want you to have more than 4%. And Falkirk is in a position where it already has more than that. But I think the main thing to think about when you're making an allocation on a geographic basis is thinking about whether the manager has demonstrated the capability of selecting investments that will deliver a strong return over the long term, right? So Schroders definitely have that capability. So they have a long history of investing in the UK. And probably the other thing I would say about the UK equity market is, yes, it's only 4% of the global market, but certainly a lot of the names within the UK equity universe are very much globally stocks with global businesses. So if you think about firms like Unilever, other large multinationals like Diageo, etc., so I wouldn't categorise the Schroders UK equity mandate as being particularly necessarily domestic. They are invested in lots of businesses that have global, global revenues as such.
Thank you. Councillor, moving on to another question. Councillor Hannah, do you have a question?
Thank you. Can I just ask a little about table 2, please? There's clearly the performance has been less than in strategy, particularly in credit and sovereign. I wonder if you could just say a bit more and explain that a little further, particularly the big dip in December 23 on sovereign.
Hi, thanks very much for the question. Sorry, in terms of that dip in 2023, I have to apologise and say that very much looks like a typo.
Right.
So apologies for that. I wonder if there's a 1 missing from that column, but we need to go back and check that. So apologies for that typo. Sorry, your other questions were around the underweight. I think, is that correct?
Yes.
Yeah.
Just a bit more clarity about why.
Yeah. So the positions there relative to target are reviewed on a regular basis. So there's a monthly asset allocation that gets looked at, and then it's also reviewed formally on a quarterly basis. The underweight to equities reflects the fact that global equities generally are trading near all-time highs. So with that as context, you might want to have a slightly more defensive position relative to your target weight. And in relation to credit, that is very much in relation to valuations for credit. So the way in which we think about the credit valuation is the spread. So how much are you being paid to take credit risk relative to government bonds? So government bonds are zero risk, theoretically, and the credit risk is the amount of additional yield you get for investing in credit. And the yields that you get on credit at the moment are pretty much close to all-time lows. So from a valuation perspective, it makes less sense to hold credit when the valuation is arguably more expensive than it has historically been over time. So those are the 2 explanations. So really for both equities and credit, valuations are quite high. So it doesn't seem as an attractive time to hold those closer to target or to hold them overweight.
Thank you.
Thank you, Councillor Hannah and Mr. Chain. Got another follow-up question from Mr. Davis. Thank you.
Hi, thank you. Looking at Appendix 1, I'm very impressed at the performance, the outperformance of the Schroders UK Equity Fund over 10 years and since inception. Presume that outperformance is net of fees, so it looks like the excess return is about 3%. Can you explain that outperformance, please?
Sure. So in terms of the outperformance, I think the thing that I would say is that without going into the individual names and the individual stocks that have contributed to that outperformance, one of the things that I would comment on is that Schroders haven't always outperformed. So you're looking at these numbers now, and the 3-year, 5-year and 10-year numbers all look very, very strong. But there have been periods in the past where those numbers didn't look as positive as they are now. So the thing that I would say is that the Schroders mandate has a very particular style bias. So they have historically invested in value stocks. And by that, I mean stocks that on a mathematical basis trade at a lower price to earnings ratio or have a lower price relative to the amount of cash flows that they generate. I think the main thing I would say is that over the long term, there are plenty of academic studies that show that value over the long term does deliver outperformance to the broader market. And essentially what we've seen is that there has been a period of time where the stocks that Schroders have invested in have outperformed. That's fundamentally it. But there are also periods of time when the value style is out of favor. So probably the peak of that was probably, I think, maybe end of 2021 or June 2021. So if you go back in time and look at the relative performance of Schroders, their performance might have looked a lot weaker, and that wasn't necessarily a problem with Schroders as a manager. It was more the performance of the underlying investments in which they invested hadn't been doing so well. So I think if we were to look at why Schroders have performed so well over the long term, I would say one, they have a value style, and two, they've been very, very consistent in applying that. And the third point would be that we happen to be in a period of time where that style has generated very, very strong returns relative to the benchmark. There will be periods of time in future where they may not be as strong. And the thing that we need to remember is that not every mandate or every style outperforms all the time over every period. So it's certainly been a very, very good period for Schroders, and the long term has been good, but it's again to remind ourselves that the game is still going on, and in another 5 years the picture may look very different, but for the time being we still remain very confident in Schroders as a value manager.
Thank you, Mr. Chen. Is that okay, Mr. Davis?
I'd just like to follow up and say it's extremely unusual for an active fund to outperform its index over such a long period of time. Normally, as you know, active funds tend to underperform the index because of fees. I'm just surprised at the level of outperformance of this fund. I'm just wondering how closely you're monitoring the risks they're taking to deliver that outperformance.
So in terms of monitoring the risk, so we do monitor the manager every quarter. We look at the stocks that they're purchasing and selling. We look at their activity. We think about their their performance and whether that is in line with what we might expect. The performance, I suppose the numbers are very, very strong over the short term, but you might be asking a slightly different question if we were looking at this again, if we were looking at September 2021. So the mandate is quite concentrated, and so we do understand that the performance can be very, very different to benchmark. But that's because it's a benchmark agnostic portfolio. So the measure of the benchmark is just as a comparator. They aren't taking positions and saying, oh, the benchmark has this, so therefore we're going to have this. They're benchmark agnostic, and the benchmark is a comparator as what the overall benchmark is performing. So that is why the performance is significantly stronger. Yeah.
Thank you, Mr. Chen. I don't see any further hands up, so I'm going to move on to the recommendations. The committee and board are asked to note recent investment market developments, the fund's strategic allocation, the fund's performance for the period ending the 30th September 2024, the investment monitoring activity discussed at the GIF. All agreed?
Agreed.
Thank you. So we're going to move on to another agenda item before we have a wee break. It's agenda item 9, engagement and voting activity, and our Catherine Carruthers will take this agenda item.
The fund uses a dedicated engagement specialist called Hermes EOS, and they provide 3 reports each quarter. The first is a voting report, which shows the number of votable meetings held during the quarter and an overview of how the votes were cast. An engagement report showing the split of engagements by region and theme, And the third, a public engagement report commenting on the engagements that Hermes have undertaken. These reports can be found on SharePoint and set out the work Hermes have undertaken during the second and third quarters of this year. Due to the timing of this report being released for this meeting, the data for Q3 was not available and as such is not covered in this report, but you can find the reports on SharePoint. There is also a highlights report which has been uploaded to the SharePoint portal, and this report spotlights the engagement work Hermes undertakes, and the committee and board are asked to treat these reports as confidential. Over Q2, Hermes engaged with 80 companies held in the Falkirk Council Pension Fund portfolio on a range of 336 environmental, social and governance issues and objectives. Hermes made voting recommendations at 226 votable meetings and recommended opposing one or more resolutions at 143 meetings. They voted with management by exception at 26 meetings, abstained at 1 meeting, and supported management on all resolutions at the remaining 56 meetings. Further reports such as the ESG report from Schroeder and Legal & General have been uploaded to the SharePoint portal. Please also note that there will no longer be a report from Newton as we've had previously, as we have fully divested from that investment manager. The main areas where Hermes recommended voting against management or abstaining on resolutions related to board structure, remuneration, shareholder resolution and capital structure and dividends. Happy to take questions.
Thank you, Catherine. I'm going to open up for questions. Councillor Hannah.
Thank you, Convener. I wonder if you could say a little more about the reasons for divestment from Newton.
Newton has been one of the fund managers we were looking at through the Joint Investment Forum, and we had been looking for quite some time at a potential disinvestment from them. So when we go through the GIF, we have a sort of red, amber, green flag for all of our fund managers and for a number of different areas, which includes things like their performance, and it also includes things like the stability of the teams that are involved in managing the funds. And I suppose that goes back to the point Albert was making in terms of Schroeder's sort of proven track record in terms of management of that mandate. With Newton, we had looked at it in terms of our sort of strategic fit as well, in terms of the mandates that we have with Lothian, for example. We were looking to make some structural changes to our mandates. So through that process of review, there was quite a lot of team changes within Newton and things like that. Performance wasn't quite where we had hoped it would be, and so we took that decision to make the change. Don't know if Albert or Emmanuel would want to sort of add anything to that comment. Thank you.
Thanks, Amanda. Yeah, not much more to add other than there has been a lot of turnover and change in the investment team at Newton. And this has been something that we have observed probably, I think, going back maybe 2 or 3 years now, and that hasn't really settled down. If you compare that to what we've seen at Schroeder's, they have that's been much more stable over the long term.
I suppose the second part to that is, has that divestment impacted in any way that's perceptible in terms of investment approach?
I think at this stage it's probably too early to tell, because it's only sort of recently happened that we've made that transition, and so as we've talked about we really need to be assessing the fund's performance over a much longer period of time. So we'll have further conversation at the GIF in terms of going through individual performance on the different mandates, but I think at this point it's just too early to tell.
Thank you, convener.
No further questions then also, Mr. Davis.
Yes, in terms of the 143 resolutions that was opposed by Hermes, is there a general theme or trend to their voting activity, or can we draw any conclusions from the way they've voted?
So the main reasons for voting against management or abstaining on resolutions did relate to board structure, remuneration, shareholder resolution and capital structure and dividends. To understand further beyond those broad levels, I would need to go in and dig, but it is something I could do. But those are the broad themes where they were abstaining or.
Yeah. I just wondered on that whether there was a theme that say where executive share option schemes were too onerous or too generous, and the conditions were not onerous enough. That's something that I know in the past has exercised people, that share options can be handed out too freely and not demanding enough of executive action.
Remuneration, high remuneration, how it was structured, though I would need to look. We do have reports that give that lower level of detail, but high remuneration was one of the issues. It wasn't low remuneration that they were voting against or abstaining.
Thank you, Kirsten. I was actually going to come in the same topic, actually. I mean, I'm looking at all the voting and all that. I mean, obviously that's just numbers, but for me, I would like to see the process and the impact to that. You know, if Hermes is voting like that, what actually happens opposing one or more resolutions at 143 meetings. So is there a more in-depth report that explains the impact and the actions of that? Because there's, voting's fine doing a certain way, but we need to know what's happening, with that company.
Okay, so Hermes do produce a public engagement report, which does cover off their engagements with the companies. And then they also have a highlights report, which covers off their engagement with companies. Hermes are also looking at the reporting that they provide to clients. So we could see some further materials produced in the future, but that is something that they are considering. There's been no hard set, this is what we're going to change, but they are looking at that.
Thank you, Cathy. I think that would be good for the future.
Sorry, just to follow up on that, what would be interesting to know is where they voted against the management, whether those resolutions were defeated or carried, because if you vote against a resolution but you're outnumbered by the other votes, it doesn't actually change board behaviour. So perhaps we could ask Hermes to tell us of the votes where they've been voted against the management, how many of those were successful.
Good question, Mr. Davis. So I think, Catherine.
I'm not aware that information is provided currently, but I can certainly ask.
Thank you, Kirsten. That would be helpful. No further questions then on this item. So the recommendations, the Pensions Committee and Pension Board are invited to know and comment on, which we've done the contents of the report and the reports provided by Hermes EOS. Agreed? Agreed. Thank you. So now agenda item 10. I just want to ask the members of the committee and the board, exclusion of the public thereafter. Are we in agreement for that? And then we'll have a short break. Agreed. Agreed, that's good. We're going to have a short break for 10 minutes, make yourself a wee cup of tea or whatever, we want to do, and we'll come back in 10 minutes. Thank you. Thank you for your patience.